I hope you guys are ready for yet again another crazy week in the stock market, because I have a feeling it's going to be a wild one. We got a lot to break down in this video: stocks, charts, earnings. But before we do, get your free money from Moomoo. You get up to 5 free shares of stock, each up to $2,500. All you got to do is deposit at least $100, and if you deposit at least $2,000, you also get a free share of Twitter guaranteed. And I think that runs out at the end of May, so make sure you guys get your free money down below. And with that being said, cheers. Let's get into the video. It's currently about just past 6 p.m. here on the East Coast, and the futures market, funny enough, just opened. And by coincidence, here we are filming the video right around 6 p.m. So right now, the futures are up in a pretty decent way. We have the NASDAQ 100 futures up 0.5%. The Dow futures, let's see here. Wow, those are up 0.5% as well. We have the Russell futures up 0.6%. And we have the S&P, let's see here, also up about 0.6%. Gold's up 0.4%. And we have silver up about 0.7%. So all across the board right now, and granted, the futures, the market just opened, and these could flip-flop overnight. Always keep that in mind. But as of now, things are pretty nice, pretty nicely in the green. And you guys remember on Friday, we pretty much had a mixed bag in the market. If I pull up SPY, let's take a look here. SPY pretty much broke even. The Russell went down 0.2% on Friday. The NASDAQ went down 0.3%, as we had the Dow pretty much break even. And what you guys should look at here, and what I'm looking at and paying attention to, is the fact that SPY ended up breaking back over 386, and we actually closed over, well, we didn't close over 390, but in the after hours on Friday, we broke over 390, which I guess is a pretty good sign. So what I'm looking for this week is, what direction are we going to pick? Are we going to see SPY dump back under 386, 385 again, which clearly that was support? It's been support pretty much all of this month of May, which if we broke 385 on the downside, that would be very bearish. Or is SPY going to pick a direction maybe towards 395, 400, which if we did go that way, maybe we broke the 180 SMA, that would be a pretty big a bullish sign, right? So we have to be patient, really. And right now, again, although the futures are up a lot, it doesn't necessarily mean we're going to have a for sure green day tomorrow. It just doesn't work like that, guys. And for triple Q, the levels I'm looking at, let's take a look here together, guys. On the bottom side, 285 roughly, that's been support all of May. And on the upside, probably around 298 to 300. That's right by the 180 SMA on this 20-day chart. So if triple Q, let's say the bulls got us towards 300, especially 310, obviously that'd be very bullish for the markets, right? And especially here on triple Q. And I think we just had our 8th straight, or is it 7th or 8th? I forget, one of the two, straight red days in the market, which is just freaking unbelievable, right, guys? So at this point, we're obviously in a bear market. We've been getting hit week after week after week. And let's see, is this going to be another week of us getting slaughtered, or are we finally going to break this streak? Make sure you guys subscribe, because we're going to be covering this, this stuff every day on the channel, multiple videos a day. And if you guys want to follow me on TikTok, Twitter, and Instagram, just go to @StasSurFest. It's @StasSurFest on all platforms. I appreciate you guys as always. Now let's talk a little bit about what's going on with stocks this week. We have a lot of earnings coming up. You guys saw the title, 10 stocks. We have 10 stocks, and these are 10, I'd say, important companies that we have to watch out for. And the first one is Snowflake, ticker symbol SNOW. And if you guys take a look at my head or my hair, I'm freaking sweating my you-know-what off right now, because it's very hot here in Jersey. I'm sure you guys are, well, if you are on the East Coast, we're getting this heat wave. It was 3 days ago, it was 65, 70, 75. Not bad at all. And now all of a sudden, it's 100 degrees. And my upstairs gets pretty hot here. And I have a closet. It's like what is this, like a 10 by 6, 7, more like a 10 by 8 closet that I film these videos in, and it gets freaking steamy in here. So if you're wondering if I just ran a mile or went to the gym, no, I'm just sitting in my closet and I'm sweating my you-know-what off. So anyway, now that I said that, you guys are probably looking at me like I'm crazy. Let's talk about Snowflake, because they report earnings this week on, let's see here, the 25th, which is on, I believe that's on Wednesday. So So they report on Wednesday. Their average EPS estimate, and you guys know the deal, when we talk about these average EPS estimates, revenue estimates, I get all of this data from Yahoo Finance, right? And other websites, but mostly Yahoo Finance. So this is based on their website. And no, they don't sponsor the content. This is just where I get this information from, when I prepare these videos. So keep that in mind. And this is based on, 15, 20, 25 analysts, depending on what company we're talking about. So for Snowflake, the average EPS estimate for this quarter, which again, they report on the 25th after market hours, is 1 cent. So they're looking to be profitable, barely profitable, but nonetheless profitable, with average revenue looking to be around $412 million. Okay, not bad, right? I'm not sure what they did last year, but I am assuming that year over year they are growing revenue. I am assuming that, at least I hope, considering this is a growth company. And you guys can see here, this stock is down massively, not 10, 20%, 40, 50%. It's down 70% from that $405 high, and I'm not even sure if that's the all-time high. I don't think it is, actually. Yeah, it's not. 429 was the all-time high in the end of 2020. So if we look at 429 down to 126, this stock went down 71%. Now it's recovered a little bit, but it's still down a lot. We're talking over 60%, and it's still downtrending. So for me, I'm not going to fight the trend on this one. I'm going to be patient. I'm going to set my alerts, and I'm just going to be watching it. I don't even think it's on my watch list. Let me add it to my watch list. And oh crap, I'm about to sneeze, guys. Alrighty, so yeah, Snowflake, it's in a downtrend. I'm not looking to fight the trend, so I'm just going to set my alert, let's say at 190, mark is at or above 190, and we'll see what it ends up doing from that point. That might not hit for the next month, 3 months, year, who the heck knows when it's going to hit, even if it ever even does hit, right? So we're going to just set 190 here on Snowflake, and look at this. I had a $300 alert on this stock. When the heck did I set that? Probably 6 months ago, 5 months ago, or whatever. Now it's way under that, obviously. So we'll watch it, watch and see what it does heading into earnings. And one thing worth mentioning is, guys, I don't gamble on earnings. I used to do that. That was one of my biggest mistakes. I lost a lot of money doing that. So now, right now, the way I'm trading these days, I'm not gambling on earnings, so keep that in mind. I'm not going to buy call options or put options or put a lot of buy a lot of shares before earnings. I'm not doing that with these stocks, or any stocks for that matter, unless of course they're long-term investments. Then obviously I hold through earnings, right, guys, and buy. Sometimes I even buy before earnings. Not a lot with long-term investments, but sometimes I do. I've done it before, I'll be honest. But for short-term trades, I don't do that anymore. Just keeping it clear with you all. So that's Snowflake. Costco's number 2. Let's pull up Costco. COST is the ticker, if you guys didn't know. Costco went down 1.5% on Friday, and it's been going down like crazy recently. And oh man, I'm about to sneeze again. God, guys, I'm a freaking mess. I just threw in some eye drops, and I think it's the allergies, quite frankly, because now that I'm thinking about it, I didn't take my allergy medicine this morning. And obviously, it's freaking hot as heck in here. But anyway, where was I? Costco. They fell about 1.5% on Friday, and recently they've been falling like crazy, obviously, because we saw, Walmart report, Target, those stocks started collapsing, which then led Dollar Tree and Dollar General to start collapsing, which we'll talk about later in this video. So obviously Costco is in that group as well. It is collapsing, and now it is officially down, holy crap, over 30%, actually, not almost, over 30% from that all-time high. And I think overall, as a long-term investment, it's not there yet, so I'm not picking up long-term shares yet. But let's say if this comes down, I was looking at the numbers the other day. I forget the numbers off my head right now. Let me just pull it up quickly. I think it's still pretty elevated in terms of some different ratios. So we're not going to get too deep into it, but honestly, it's got to come down a little bit more, guys, for me, for a long-term investment, and probably for me, honestly, it's got to come under $300. Call me crazy, but if it starts coming under 300, that's when I'm going to be interested. So their earnings are on the 26th, which is on Thursday. Their average EPS estimate is $3.03. Average revenue estimate is $51.38 billion. So they make a lot of money on the top line. I forget what their gross margin is, but on the top line and what their net margin is, I don't even know. I got to double check, but they make a lot of freaking money on the top line, guys. Revenue of $51.38 billion is what is expected, so I'm going to set my alert. Where should I put it? Maybe 435. Let me do that. Create alert. Mark is at or above $435. Let's see if maybe we can catch this, on a snapback, maybe a bounce back play. Even though I'm not looking to pick up long-term shares here, it doesn't mean that I'm not looking to trade it. I'm for sure looking to trade it. I'm all for that. So the next one here is Nvidia, which this week Nvidia is going to be one worth watching, considering they're on Wednesday reporting earnings. On the 25th, guys, which is the same day as Snowflake, they're reporting, or their average EPS estimate, which again, all these numbers are from Yahoo Finance, guys, $1.29, average revenue estimate of $8.12 billion, which is up 42% if they do that, $8.12 billion revenue. That would be up 42% year over year. So that's pretty nice growth considering, we're in tough times right now. And of course, there's a lot of problems with, Nvidia, Intel, AMD, supply chain, yada, yada, yada. And they're still growing pretty nicely year over year. And the stock on the flip side is not. It's actually down 50% from that $350 level that it hit back in the that was in late November. So it's down a lot. And I don't think it's undervalued per se yet. It's still right around where it was before the split, if I'm not mistaken. Let's see here. The split happened about a year ago, if you guys don't remember. That was in July, I think, of 2021. Yeah, it was right around. It's actually under where it was before the split. So that's good. If we want to get this for a long-term investment, obviously, we want it to come down lower. We want to buy it at a lower price. So for me, I've been very open about this. When Nvidia was at 250, 300, 350, I was saying it's way overvalued. I'm not touching it. Even a year ago, guys, before the split, I'm not sure if you guys remember or if you've been following me for that long. I'm sure there's people that have been. I was talking about Nvidia then as it was too overvalued. And here we are a year later, and I didn't buy it yet. I've been patient. Now could be the opportunity. Not quite yet, but if it starts coming down under 150, 140, 130, low hundreds is where my buy point is personally on Nvidia, or at least an initial buy point. And we'll see. This bear market we're in, if it gets uglier, this is the market that could get Nvidia to that price, which again is where I'd be looking to add a little bit because I haven't bought any. And that's the thing with investing, guys, especially long-term investing. You got to be patient. And sometimes people are like, oh, so you mean a couple of days, right? No, not even a couple of days, weeks. Sometimes you got to wait months, sometimes years for certain stocks. And that's just the reality. So the next one here is Ulta. Their earnings are on the 26th, which is Thursday, same day as Costco. Their average EPS estimate is looking to be $4.45. Not too bad. Average revenue estimate of $2.12 billion. So Ulta is now down, I think recently, 22%. And we're talking just in the past month, guys. Just in the past month. This is not a stock that crashed. A lot of these stocks peaked back in November, December, January. This peaked about a month ago, and it's just been cratering ever since. Again, down over 20%. It's in a bear market now. So I'm kind of interested to see how these earnings are looking like, because we all know Ulta is one of those businesses that got hit very hard during the pandemic, the pits of the pandemic, right? It got hit very hard, and it's one that it's been doing well now that we've been getting out of that environment. People are going out more. They're shopping in store for makeup and so forth and all the other products that they offer. I want to see if that trend is continuing pretty much, which I have a feeling it is. And if we do get strong guidance, maybe they reaffirm guidance and maybe they do well with numbers. Who knows? Maybe this 23% downtrend that we're in, maybe it could start reversing. Let's see, guys. So that's Ulta. So like I said, Dollar General and Dollar Tree, both of them are reporting this week as well, which they fell off a freaking cliff last week, guys, when Target reported, Walmart. Just last week, I think Dollar General just last week went down 20%. Think about that, guys. 20% in a week. And over the past month, it's down 30%. So it's just been getting destroyed. Now Dollar General is at a big level of support around 180, 185, which was that low from the end of February. So they report on the 26th, same as Dollar Tree, which is DLTR. We'll pull up that chart in a second. Dollar General's average EPS estimate is $2.33. Average revenue estimate's $8.7 billion. So let's see. I'm going to set one alert here at 180 if it wants to let me. Come on, guys. Here we go. Mark is at or above $180. And finally, it's starting to get nice. Not nice and cool in here yet, but it's it's starting to get cooler in the upstairs right now. Jeez, guys, I have to crank that AC. Woo, man, you have no idea how hot it is up here. You guys, if you have an upstairs and there's no AC unit directly, you guys know what I'm talking about. So I have one alert here at $180 on Dollar General, and I might as well put one on the upside as well. I'll put one at $190. Mark is at or above. And let's pull up Dollar Tree and see what they're looking like. Oh, this chart looks way better. Look at that. This chart's uptrending. You know, it's obviously recently collapsed under the moving averages. We have a death cross now as well, but overall it's still, I guess you can argue, I mean, hey, it's still overall in an uptrend from the past, considering in the past couple of months it's been going higher and higher and higher, right? We went from $84 to $148. We just peaked at $177. And who's to say this, this isn't a little dip that will get bought up? I mean, it's too early to tell. So they report on the 26th, I believe, right? Yeah, with average EPS of $2.01. Average revenue estimate looking to be around $6.76 billion. So notice one thing worth mentioning here on Dollar Tree is last week on Friday specifically, we took the lows out from Wednesday, and if you notice on Thursday we actually held on top of Wednesday's lows. So the fact that on Friday we hit fresh lows, that is bearish. But if this is able to rebound, let's say over 135 after this earnings report, which, mind you, 135 was the high, or at least one of the highs from last week. Actually, more like 138. My bad, guys. More like 138. If this is able to break out of there into the 140s, then we might start getting a push to the upside. So I'm going to put an alert at 138, and I just want to see, are we going to take the highs out, or one of the highs from last week out this week? That's what I'm watching for. Alibaba is another one that I'm watching. Baba is the ticker, BABA, guys. This went down 1% on Friday. They report earnings on Wednesday this week. Actually, no, that is on Thursday. The 26th is Thursday, guys. The 25th is Wednesday. Alibaba's average EPS estimate is looking to be around $1.08. Obviously, that's converted into American dollars, guys, US dollars. Average revenue estimate is $29.45 billion, which is only up 1.8% year over year. So we know that China right now, their economy is in shambles. They're locking down. It's just mayhem over there right now, guys, and their stocks are all getting destroyed. So I'm not surprised that Baba year over year, if they do $29.45 billion, they're only growing not even 2%. I'm not surprised at all. Actually, I'm surprised they're not contracting a bit year over year. But for me, it's fine. I bought this stock. You guys know I hold it. A lot of you bash me in the comments, or not. I don't want to say bash me, but you poke holes at me. You're like, Stas, you're bag holding Alibaba, and I don't know how many times I'm gonna say it until I'm blue to the face, guys. It's a speculative position. Yes, I'm in Alibaba with an average cost probably at around, I haven't checked, probably 140 to 150, maybe a little bit lower. I'm getting destroyed, and I'll probably buy more, and I'm holding for the long term. So whatever. Yes, poke holes at me now, but in 10 years, if Baba is $400 or $500 a share and I'm up 3 times, don't look at me and be like, oh, you're so great. Oh, what, yada, yada, yada. I don't want to hear it, right? So I'm in it. love it, hate it, whatever. It's a small position. We'll see what ends up happening. And in the short term, look, if it starts breaking over 100, if it starts breaking the moving averages, this might start breaking towards the mid-hundreds, right around my cost basis, but we're not there yet. So my alerts are set. I'm probably going to be buying more. You might as well try and bring that average cost down to the lower hundreds. I'm talking 120, maybe even lower than that. So the next one here is Toll Brothers. Toll Brothers will be very important to look out for, considering the state of the real estate market right now. And I'm no real estate expert, but I do understand it's cooling down. Inflation's hot. Mortgage rates are running. People aren't wanting to buy as aggressively as they were a year or 2 years ago. So this is probably going to have an effect on Toll Brothers, and the stock's definitely been pricing it in. Look at this. The stock's down 37% over the past couple of months. When was that? Back in the middle of December where it peaked, and they've just been going down and down and down. We hit a fresh low about 2 weeks ago, 2 weeks ago. This does not look like it wants to reverse anytime soon, and they do report earnings this week, as again, all these companies report earnings this week. They report on the 25th on Wednesday with average EPS looking to be around $1.54, average revenue of around $2.06 billion, and this one's pretty close right now to that 180 SMA, guys, right around 48 bucks. I mean, look, geez, we close right under it. So I'm going to put an alert right now at 50 bucks a share. Mark is at or above 50 bucks a share. If this ends up breaking, we start moving towards that multi-week high, 50 plus, there could be a short-term breakout just because it's down a lot, just because the industry's struggling a little bit right now or it's cooling off doesn't mean we can't get short-term rallies, right? So keep that in mind. The next one here, two more, guys. Make sure to smash that like button if you're still watching. Subscribe if you haven't done so already, and get your free money from Moomoo, 5 stocks, and 5 stocks from Webull. Don't forget about Webull. All those are linked right down below. JWN Nordstrom is also reporting earnings this week on the 24th, which is actually, out of all these companies we talked about, guys, this is the earliest report, and the next one's actually on the 24th as well, which is on Tuesday. So JWN, their average EPS estimate is -5 cents. So they're losing 5 cents per share roughly on the quarter, right, guys? Again, these are all estimates. And the average revenue estimate is 3.28 billion dollars. And this stock, look at what we're seeing here, guys. Call me crazy, but this is not, it's not a perfect Head and Shoulders, but it kind of looks like a Head and Shoulders to me, right? I mean, it looks pretty, actually it is pretty perfect Head and Shoulders. So if this plays out, maybe their earnings aren't strong, there could be more downside. That's what makes me a bit nervous. You know, if this inverse head, or not inverse, it's a regular Head and Shoulder, if this plays out, it could be going down to $18.50, $19 on the lower end. And again, they report earnings in 2 days from now after the bell. So watch out for JWN. And the last one is Intuit. Let's pull it up. Intuit went up 1.5% on Friday, and overall, it's down a lot. It's down 47% from that recent $719 high, and they report on Tuesday as well, the 24th. Average EPS estimate from Intuit is $7.58, with average revenue looking to be around $5.51 billion. And what does this stock have in common with pretty much all of these stocks other than Dollar Tree and what's the other one? Costco? It's downtrending, guys. It is downtrending, and for that reason, I'm not fighting the trend. I'm just going to wait till it reverses, if it ever reverses, and even if that means it reverses in a year from now, who the heck knows? So I'm going to set my alert at 300 and maybe 75 for the short term here. Let's see what it does, right around that 50 SMA on this 4-hour chart, and then we'll see what it does. And yeah, I guess that's it for the video, guys. If you all enjoyed it, smash that like button, subscribe, drop me a comment. It's going to be an interesting week this week. I'm pretty excited for it, honestly. And if you all haven't gotten your free money yet for Moomoo, deposit at least $100. You get up to 5 stocks, each up to $2,500. And if you deposit at least $2,000, you also get a free share of Twitter on top of those 5 stocks. Make sure to also join my Patreon and get your other 5 stocks from Webull. All of those, again, are linked down below. And with that being said, cheers, guys. I'll catch you all in the next video. Thanks for watching. As always, peace out.